In general, insurance agents struggle with marketing. But why? I feel like it's because, for the most part, insurance agents are not typically guided and directed the right way into learning the marketing 101s that's necessary to start generating your own leads, marketing your business, and growing substantially as a result. And in this video, I'm going to break down a lot of those principles that have helped me become an extremely savvy marketer and growing our agency as a result. First things first, you have to understand basic marketing terminology in order to really explode your marketing and kind of know what it is that you're trying to look for as a result. So in terms of terminology, I want to go over three basic principles with you. First is cost per lead, or CPL. Second is lifetime value, or LTV. And the third is CPA, or cost per acquisition. Now, what do these mean? Well, let's get into each one by one. Let's start with CPL. A lot of times when agents first start doing their own marketing, particularly online paid ads, which we're going to talk about later in the video, they are obsessed with one metric oftentimes, and that is usually CPL. CPL is your cost per lead, and it can oftentimes be a very misleading form of tracking how effective your ads or your marketing is really going. Cost per lead is how much you're paying per lead, point blank. So, for example, let's say I'm running an ad online and I am getting a $5 cost per lead, opposed to another person that's running an ad that's getting a $15 cost per lead. So, in theory, me at $5 CPL is doing better than the guy that's spending $15, but maybe not always. Let me explain. Oftentimes, your CPL can be misleading because CPL does not always translate to the intent or the quality of the prospect that's coming into my funnel or into my atmosphere. Let me explain. When it comes to CPL, it is really, truthfully, not a very difficult thing to get it as low as possible. You want to know the secret? The secret is find ways to make your ad as spammy as possible. Giving away free things never hurts. Anything that would result in a low intent lead. I'll give you an example. For a long time, there was so many different types of ads that are running, and there's even some today that would be running Medicare ads uncompliantly in most cases, where they are offering to give away large rebates, right, in the form of a credit card, all kinds of things. I saw a Medicare ad years ago that was offering a free toaster for opting in to the advertisement. So when the agent would call the lead, the client was not interested in talking about their plan or Medicare or insurance at all. They were interested in acquiring the free toaster, okay? You better believe those CPLs were extremely low as a result, but also were the intent of the lead. Now, this doesn't mean that a low CPL is always a bad thing necessarily, but sometimes it can be, and you have to make sure that you're trying to balance your CPL with your intent and quality of the lead. I myself have always been willing to pay a little bit of a higher CPL. Like, I would rather pay $10 a lead opposed to $5 if it means I have a better quality of prospect, because then my other metrics are probably going to be better as a result, getting into lifetime value and cost per acquisition. Let's get into those. So lifetime value is looking at a client, especially in the insurance world, and understanding what their lifetime value on average is in terms of their policy being on the books for you. Now, you can only determine this by tracking your own numbers. This has a lot to do with what you're making first year in terms of commission. How much are you bundling different products? What is your first year commission? What is your annual commission? And how long are you keeping clients on the books? This has a lot to do also with your retention and how well your retention efforts go. If you have poor retention efforts in your business, your lifetime value might be much lower. I'll give you an example. Let's say an insurance agent, just to make sure we're working with round numbers, is making an average of $300 a year in annual commission. Now, if they're bundling, cross-selling, things like that, it should be higher. But let's just, for the sake of example, say it's $300 in this situation. And let's say on average, that agent does some checking into their own personal book of business, and they determine that on average, factoring in people that are staying a long period of time and factoring in people that fall off after a year, maybe even 6 months, On average, they're keeping people on the books for 3 years, which isn't great, by the way, but let's just say that's what they find out. Well, then you can determine that your lifetime value of a client that you're bringing into your business is $900. And a lot of the big boys, bigger insurance agencies, call centers and such, track their information and their revenue and their progress in their leads and marketing by what their lifetime value is, not necessarily their first year commission. That's the difference between agents and agencies when they're tracking their data. So an agency or a call center might look at it like, if they sell a new policy and let's say their lifetime value is $900, that the company just made $900 in revenue. Now, some will stay on less amount of time than that, some will stay on more, but maybe their average works out to be that if they have a low and short lifetime value of said customer. Now, on average, I've always said that an insurance agent should be at 5 to 6 years, bare minimum on their lifetime value of a customer. So let's say you're at 5 years and you're making, again, in the same scenario, $300 a year in annual commission, then you can best estimate that your lifetime value of the client is $1,500, and so on and so forth. In our agency internally, we estimate that our lifetime value per customer, because of, we're keeping clients longer, we do bundle pretty well, we cross-sell other ancillary products, is about $2,000 a customer. So every time we bring on a new customer, we can bank on the lifetime value of that policy being worth $2,000 to the agency. Now let's talk about the last metric and the last piece of terminology, and that is CPA, cost per acquisition. What is cost per acquisition? Well, you could argue that it may be the most important of the three, and that is how much on average does it cost you to acquire a new client, factoring everything in. That's why I said earlier, this metric is more important than your CPL. Cost per acquisition is on average going to be the exact dollar amount that it costs you of all your marketing, all your spend to acquire a new client. Now, a lot of agents really misinterpret and misunderstand CPA. Your CPA has to be scalable for it to really make sense and to really matter too much in your business. For example, an agent that gets all referral business, let's say they don't do any type of paid marketing, they don't spend anything on their business, might have a CPA of $0. They don't spend anything on average in their marketing or their promotion to acquire a new client. They're paying $0. So in theory, they win, right? Opposed to an agency that might be spending a $200 or a $300 CPA. Now here's the problem with that. When you are just getting referral business, that means that your business is not predictable. It's going to be a little bit of ebbs and flows in terms of how many referrals you're getting, and you typically cannot bank on getting a referral at any particular point in time. But real marketing as an insurance agent means I can put together a budget, I can put together an ad spend, I can spend it, and because I am dialed in with my metrics and my numbers, I'm going to know exactly what my cost per acquisition is. And let's say my cost per acquisition is $200 and my lifetime value is $2,000. That means I'm trading $200 to acquire a client at scale in a predictable way to bring in $2,000 of revenue to my agency. That's the way you want to look at it. So if your CPL, let's say cost per lead, like I said earlier, is low, let's say it's $2 or $3, something really, really low, but your cost per acquisition is very high because the quality of lead is very bad, then you're probably better off getting a $10, maybe even a $15 cost per lead for the sake of example, if your cost per acquisition is better. Time and other things like that factor into this metric, but just looking at the numbers and the data itself, these metrics matter, and they are important when you're trying to learn how to market yourself as an insurance agent or market your insurance agency. Let's talk about types of marketing now. There's a couple of different ones I want to go through, and we'll go through them one by one, but that would be organic, grassroots marketing, and paid marketing. So let's first start with organic. Okay, so what is organic marketing? The best definition that I can provide to you, in my opinion, of organic marketing is long-term efforts that you're going to make, perhaps maybe digitally or online, that over the long period of time might bring in business, but it's going to take some time, it's going to take some consistent efforts, and it's going to take really kind of a long snowball type approach to bring business in the door. For me, this would be anything that you're doing in terms of digital marketing that is not paid advertising. An example to that might be content marketing, podcasting, YouTube videos, social media posts, anything like that over a long period of time can create a tremendous brand, a tremendous amount of interest from your target audience and bring new business in the door, but it's not something that's always going to be relatively predictable. It might grow to become predictable at some point in time, but it might not be something that you know for a fact you can flip on a switch and you can get, let's say, 10, 15, 20, 25 clients in a single burst like you could with paid marketing, which we're going to get into a little bit. Now, that being said, organic marketing is important. And the best agencies have that included in their marketing approach. It's a point of emphasis in terms of what they do. It's just not all that they do. Another example to this might be organic SEO, Google My Business listings, things like that, that people can stumble across you, your brand, your agency, and they might reach out as a point of interest. Now, we have done extremely well historically as an agency with organic marketing, but it is by far the only thing that we do, but it's a mix. It's a part of what we do. Let's move on to grassroots marketing now. Grassroots marketing, by my definition, is anything that you're doing to pound the pavement, right? You're getting out into the community and you are trying to build relationships. You're trying to meet people being out and about. It's sitting at booths. It's doing flea markets. It's doing bingos and different types of activities for 55 and up communities. It is going out and trying to network, meet referral partners, other business owners that have the same clientele as you do. Financial planners, CPAs, dentist offices, doctor's offices, mom and pop pharmacies, etc., elder law attorneys. There's a whole slew of them. And grassroots marketing can be a very proven and effective tactic, especially when agents come in and they don't have any kind of means to spend money on advertising. I've always said new business is always going to cost you one of two commodities that you have to offer. It's going to be either time or money that you have to give up. And the question you have to ask yourself if you're watching this is, which one do you have more of to sacrifice? Is it going to be time or is it going to be money? Well, when you first get started in the business, for the average person, they're going to have more time to give up than money because they just don't have much of a business yet. They're not established. People don't know who they are, but they have all the time in the world because even though that they don't have a business, meaning they don't have money, not having a business also means you don't have a lot of responsibilities, you don't have clients you're taking care of, anything like that, so you have a lot of time to give. And grassroots marketing doesn't typically cost much money, but it does cost time. And so grassroots marketing is something that I did early on in my career, and some of the efforts that I did are still paying dividends today. I don't do them anymore because I don't have time to give anymore, but I do have money to give. That's why I focus more on the final area we're going to talk about in this, and that's paid marketing. But grassroots marketing can be a great thing, right? Getting out and networking with people, right? Like I have built an entire network, if you will, of referral partners over the years that brings in a lot of referral business for our agency each and every year. A lot of those relationships were made 7 years ago, 8 years ago, maybe even as long as 10 or 11 years ago when I was first getting started. So grassroots marketing can be a very good and effective tool, but it's going to have a means to an end for most people because as you grow and as you start bringing in more clientele, you start having less time to give, which grassroots marketing requires, and more money to give. You have less time, more money because your business is starting to thrive, which means you can part with your money to bring business in the door, and that's where we get into paid marketing. What's an example of paid marketing? Well, there's a couple different things you could be doing. There's online paid ads, Facebook ads, LinkedIn ads, Google ads, YouTube ads, things like that. There's seminars, in-person seminars where you are marketing to people that you're going to be doing a seminar on some particular topic. Maybe it's a Medicare 101 for people turning 65. Maybe it's a Social Security seminar that you also talk about Medicare as a result. But it's marketing to people that you're going to be doing a presentation for free. Maybe you buy them dinner, maybe you don't. But people are gathering all at once, a lot of people all at once, and you're doing one presentation to a slew of people all at once. It's a very efficient and profitable way to market if you can get it down. You also have things like webinars, right? Maybe you're doing advertising that pushes people into a live webinar. Maybe it's a pre-recorded webinar, and then people pre-schedule an appointment on your calendar. Maybe you're doing direct mail. Direct mail that either requires people to send back a business reply card for you to call them. Or maybe it's for them to call you. Maybe that's the call to action. But sending out mail in some form or fashion, and the mail's intention is to get people to make a decision and take action on it, either sending it back to you or maybe calling you, depending on what the mail's call to action is. TV. Maybe you're doing TV commercials. Maybe you're paying to go on the news. Most local news stations will let you come on for a fee. I did it actually recently earlier this year when we went through our rebrand from Christian Brindle Insurance Services to Everything Senior Insurance. Wanted to get the word out locally because a lot of our clients are local here in Utah, so we put that as a small piece into our overall rebrand communication efforts around the community. Billboards. Maybe billboards is a way to go. You put a giant advertisement up that's for the world to see. Maybe it lifts up your other types of marketing that you're doing. It breeds familiarity. It's good branding for your business, etc. There's a lot of different ways to do paid marketing, and there's more things out there than what I just said, but those are going to be typically what most types of paid marketing is going to fall into some category on. Now, for me, there is different types of marketing tips that you need to know to be successful when you're marketing your business. The first thing I'm going to tell you is to track your data and react accordingly. The worst thing you want to do as a marketer is to not know what's working and what's not. You're not tracking anything. You're not looking at your metrics. You are literally just throwing things against the wall and hoping that they stick. And any type of marketing that you're doing, you should have a way of measuring what type of business you're getting out of it. So you should be tracking where your new business is coming from. Is it coming from this seminar I'm doing? Or is it coming from this online Facebook ad that I'm running? Which one is it coming from? Because if I don't know, I might not know which one's working. Maybe the seminar's doing terrific, bringing a lot of business in, but my Facebook ad's bringing very little business in, but I'm splitting my cost 50-50 between them, when in reality, maybe one's working better than the other. I should shift my priorities and my budget more into what's working, right? But you'll never know that if you don't track your data. The things we talked about at the beginning of this video, your CPL, your LTV, your CPA, those are other examples of tracking your data and being able to take a look at what's going on with your marketing and be able to know, okay, I see what's going on here and I know what's working versus what's not working. Most agents make the mistake when they're doing any type of marketing to add so much fluff to what their message is. They don't keep it short, they don't keep it simple, and they add a lot of unnecessary layers to their marketing and they overcomplicate it, right? They treat it like an organic piece of marketing, right? That it's educational. That doesn't mean your marketing can't be educational, but there's a way to approach paid marketing. And to me, I feel like there's 3 holy grails that all pieces of marketing should have. The first one, problem, AKA your hook. What is the problem that your ideal audience is going through? What is the pain point that you want to identify? And to me, an example to that could be, since I'm in the Medicare business primarily, someone is turning 65. They don't know which direction to go. They don't feel like they understand their options. So that might be my hook. Tired of feeling lost and confused with making the right Medicare decision, not knowing what's true and what's not? Well, not to worry. Then you move into the solution, the second thing. I'm here to help. My name's Christian Brindle. I'm a local Medicare specialized insurance broker, and I am here to help you navigate the options. I've helped thousands of people, and I eat, sleep, and breathe Medicare. You're offering a solution, then the call to action. So problem, AKA the hook, solution, call to action. Those are going to be your 3 holy grails in structuring all of your advertisements. So your call to action needs to be, after you've presented a solution, I can help you. I'm not going to charge anything. There's no obligation for my services. Let's have a conversation and you be the judge if you feel like I solved this problem for you. Then the call to action is, let's schedule an appointment. Reach out to my office, whatever your call to action is, but you have a call to action at the end. Let's get together. Let's have a conversation, and I can prove to you that what I'm saying in this communication is accurate. And those need to be your 3 steps in any type of marketing. Mail, ads, etc. And by doing that, you're going to be quick to the point. You're going to get people's attention because they're feeling the pain points that you're addressing early on with your hook. You're going to provide a solution that they're desperately looking for, and then you provide a call to action on how you can get together and deliver on the promises that you're making in the advertisement. So structuring your ads and your marketing properly will go a long way. Urgency. Urgency is the next tip. Having urgency in your marketing is your friend. What do I mean by that? Well, if you don't have any urgency in your marketing, people might feel like they can always come back to it. And typically they never do. But in their mind, they might think, oh, I'm going to come back to this later. I don't have time right now. But let's say you put on urgency. An example of urgency in a Medicare ad might be, did you know that you have a certain window to make a decision and enroll? Otherwise, you might face late enrollment penalties if you don't make the right decision or things aren't set up properly. Let's get together today so that way I can make sure that you are not going to be impacted by this and you don't get hit with a lifetime late enrollment penalty. That's urgency. You're providing urgency to where they feel like in the moment that they have to take action on your advertisement now, or they might miss out on something. So providing urgency always pushes people over the edge more than an ad without urgency. Next tip, understand this. Most agents have a hard time with this one. Marketing is not a cost. It is an investment into your business. You should not be looking at it as an expense like your utility bill or whatever it is you might be spending, but it is an investment into your business. Marketing should be bringing a direct ROI. It might not day one. It might be something you have to test things out, try things out, adjust your messaging, find out what works. But it is, at the end of the day, meant to bring an ROI and a return on investment instead of just flushing money down the toilet. So treat it as such. Treat it as an investment. If you buy a piece of real estate or if you buy a stock, you're not looking at that as an expense typically. You're looking at that as I'm investing into something. Marketing yourself and marketing your business should be treated the exact same way because it's lighter fluid to help your business go to the next level. Last but not least, in terms of the tips that I'm going to provide with you on marketing, try not to be like everyone else. Try to be different. Try to be uniquely you. Try to present things in your voice, not someone else's, as much as possible. What do I mean by this? Well, you might have seen this before, but there's always a trend every couple of years where someone has a fancy new way to structure their ads or structure their marketing, and they start selling it to others. People go through a course or a training or something like that, and every student that goes through it is basically taking what I call done-for-you advertising, and they're copying and pasting it, slapping their logo on it and their name on it, and running it as an ad. What happens then, everyone else that is running the same ads as you that also was a student of said marketing, you're not standing out as much. Your ads are confusing and they are confused with other people's ads. And what it does is it reduces and shrinks everybody's effectiveness on their advertising because everyone's running the same type of ads. In my opinion, you should never be using done-for-you pre-built templates because a million other people are using them too. You should do your best to structure your ads that are unique to you, that are in your own message, that are your own type of flavor, and reflect the values and the messaging that your company specifically wants to portray out there to the masses. That will typically bring the most effective results back over a long period of time, opposed to just running the same ads as everyone. There's been marketing companies over the years in the insurance space that will come in and they'll offer to run, let's say, Facebook ads for you. And they might be doing it for 100 other agents or 200 other agents, and they're running the same ad for all 100 or 200 clients. Imagine the intent on that. Imagine the ability for people to understand your branding of your business. They can't because it's a cookie cutter thing and anybody can step in and replace you because there's nothing unique or special about what you're doing, and they're seeing the same ad from a lot of other people. So avoid that. Avoid cookie cutter templates, avoid done-for-you solutions, and try to find solutions to where you're structuring your own ad to where it's going to stand out and be uniquely you. Anyway, guys, I hope you enjoyed this masterclass of insurance marketing that we presented for you today. If you like this type of content and you found it valuable, the only way I'm going to know about it is if you smash the like button for the YouTube algorithm. It will help so many more agents just like you who are struggling with their marketing and need to hear these tips and principles find the video easier in the YouTube search algorithm. Make sure to comment down below. Did you find this video helpful? Do you want to see more like it? Is there anything you feel like was missed, or is there anything you particularly liked about the video? We want to hear your feedback. Make sure to subscribe. We put out weekly videos just like this that help you grow your insurance business with real, practical, no fluff information. And make sure to subscribe so you don't miss any of those future videos going forward. Appreciate you watching. Wishing you massive success. If you're watching all the way to the end, I appreciate your support. And we'll see you on the next one, guys. Thanks, everybody.